I'm starting this presentation with Greece because that's the news, that's everywhere. And that is kind of affecting most of the market and will affect in the short term. I assume that most of you would know what's happening in Greece. In short, I'll try to describe it because I have about 40 minutes only and I need to cover a lot of things. So I'm just describing in simple word that there's this party called Sridhar Party, which is anti-austerity. They have the anti-austerity agenda. And so while the ECB and the IMF and EU, which are the Troika, which are bailing out Greece, has the austerity agenda, so they have conflict of interest and that has created some rift between the two, and then that's what we keep hearing for so long. So you might have heard about the Brexit, that if nothing goes on, Greece might have to leave Eurozone, and then there might be some consequences. What I believe is that, and what we believe as a department is that the Brexit is a scenario that both the parties, whether it's Eurozone or Greece, wants to avoid. It's not good for any of the parties globally as well. But assume that Brexit happens, and why there's a chance is because Greece has already gone default on IMF. There's a good chance that they might go default on ECB as well. This month they have to come up with $3.65 billion. They don't have it, they can't produce it. And there's a referendum tomorrow, so probably you will see a lot of volatility soon, like when the market opens on Monday, based on what happens on the referendum. So the referendum is about, so the Prime Minister, Alexis Tsipras, has asked the citizens of Greece that whether they want the austerity or they don't want. So in case they say yes, means they are with the austerity, things will be quite fine because they will go with the suggestion of what the ECB and the European Union and IMF has suggested to them, and we will see this volatility to decrease in the future. The most likely scenario will be that they might say no to in the referendum, in which case they would not accept the suggestion given by the Troika, and we might see this Greece event take along for next few months as well. Greece has already defaulted. They might default like I said, they might default with the ECB as well. It's a very funny situation because Greece does not have any power. They need money. They need to feed the government employees. The government is spending and they don't have anything. They have already put on those financial capital controls so that people can go out and take out euro from their banks, because then there might be a bank run and banks do not have money. So it's a very funny situation because if they say no, then this capital control might elongate for a further few weeks, and then that might deteriorate the Greece. But here's the thing. The country or the region that's gonna be affected the most will be Greece. Why? Because they don't have the power to do anything, they don't have money, and if they get excluded from the further funding, they cannot do anything. And we might see some bank runs, we might see that there might be, politicians quitting and then a new round of elections or things like that. We could probably see that. On the other hand, on the European side, all they're gonna lose is that they will have a lot of those debt that Greece has defaulted, and they will be just holding those debt. It does not mean that Greece will not repay them at all. Default is the word default means is that they were unable to produce the interest for that period only. It does not mean that Greece is gonna say, okay, I'm not gonna pay you back those $200+ billion, at all. That's not gonna happen. But over a short term, it might have a very good. It might bring volatility into the global market, because mind it that Europe accounts for around 1/5 of the global trade. So anything happens to Europe will definitely be brought up in the global market, whether it's US or Asian market as well. but it will be a short-term thing, and what we believe is that long-term Europe remains quite sound, and I'll share you why. And so this entire scenario might provide you a very good buying opportunity, like. So, okay, I got a lot of charts here as well, so that those staff-savvy investors, they can look into the charts, but I'll try to be as simple as possible so that most of us can here understand the point here. So, if you talk about the Europe side, the economy is at an inflection point. It is expected to grow at 1.5%, which is not bad, considering that the general global economy is quite weak and they are on a recovery mode. Recovery should shift to the domestic consumption, barring any, of course, things like the Brexit and stuff, which might have a short-term negative effect. But long-term wise, the entire Europe and the Eurozone has been on the uptrend. Growth in the money is accelerating. Lending conditions are good, better now than previous. And that's a very important thing for Europe, because this ease of credit is something that ECB has been trying their best to be with. And that is the reason they introduced these LTROs and the recent QEs that is helping to bring on, and so it's working, that's the good thing. Fiscal policy consensus should be debated, and that is because there are countries which are like Germany and France, and there are these countries like Greece and Cyprus which have total different fiscal policies, and they have their political risks, they're totally different political risks, and so they need to consolidate just like their monetary policy, which has been consolidated. Several headwinds have already been turned into tailwinds. So, including the negative effect of the weakening euro, easing fiscal austerity, like I said, growth is there. So probably in countries like Germany and France, and maybe a little bit in Spain, you might see some ease in the austerity. But Greece is totally on the other side. During December, talking about the next half of this year, you need to be quite. You need to monitor especially the election in Spain. So there will be 4 more elections this year, and the Spanish election, which is due, I think, around first week of December, is the most important one to look into. Why? Because they have the same problem. There are a new party called Podemos, which is quite similar to Syriza. It has, according to many surveys, is the leading party now, and they are anti-austerity as well. Now, Europe cannot afford to go anti-austerity full-fledged in Spain as well, because the growth is in a very initial stage at this point of time as well. So that is something you might want to look into, keep monitoring it if you trade in the Europe side.